Morning team. Yeah, it's a crazy market at the moment, and it's only going to get worse over the next 48 hours as we have, well, UK inflation, which is still very high, and you'd expect their bond markets to continue to rally as it has. But the big one is the press conference. At my time here in Queensland, it's going to be 4:30. Probably 5:30 down in New South Wales, and wherever you are around the world, just make sure the clock is on your time zone so you know when it is, because that's when the volatility is really going to hit. I'd say the volatility is going to be reduced as people don't really want to take large positions into the Fed, but then it's what he says, how it's going to break down, how he's going to battle both the inflation crisis and the banking crisis. By all intents and purposes, the Treasury, who was a former Fed herself, what's her name, Yellen, I can't remember her first name, but anyway, Secretary Yellen came out and said it's all under control. Is it? Is it really? I've seen so many dead cat bounces in my time that I think this is just another one. And I'll show you a chart in a second about that. But after that, tomorrow night we've got the SMB, and that'll be interesting because of the bailout that they've had to do for Credit Suisse and force that on the taxpayers. If I was a taxpayer over in Switzerland, I wouldn't be really happy with having to foot the bill for Credit Suisse mismanagement, and a $3 billion pill to swallow too. Then we've got the BOE, so it's Super Thursday coming on, and the volatility around that, over it, and post it is going to be pronounced, and volatility is pretty keen at the moment, or king at the moment, so it makes long-term trading pretty difficult to do. Chart I wanted to show you is this. This is the bond market in terms of volatility on the bond market, and we can see that when it spikes, things break, and this is back in the 90s when long-term capital management failed. This is when Bear Stearns and then Lehman's failed. That was COVID lockdown, and here we are here, and you think it's all over? No, it ain't all over. What we're seeing in price action, particularly over in stocks, is what they call a classic dead cat bounce. And I don't think that stocks are going to remain up at these levels for too much longer. Dollar index, well, let's go and have a look at bonds. Excuse me, bonds also rallying, interest rates rallying, so bonds are getting sold off, and that's, I would say, on the back of Jerome Powell trying to curtail inflation. Where's that going to sit? How's that going to look? And the yield curve volatility is extreme as the short end gets smashed around, and the longer end is trying to work out what the hell's going on. Over in commodity land, there's a bit of a bounce in oil, a bit of a sell-off in gold as the stocks are rallying, so that risk assessment's coming off. But I think that's, to me, been around 30 years. There's not, this ain't over yet. We've got a long way to go, and global recession is just around the corner, and I don't think the stock market's pricing that in. And that's usual. The stock market tends to get it wrong more than it gets right. Dollar index, well, sorry, didn't want to do that. What was it? That was I'll sort that out later. Dollar index coming off again. There's the unwinding of safe haven trade, and the unwinding of potential interest rate rises, so having a pressure on the US dollar. Yen also a little weaker as that safe haven unwinds. Erroneously, I think they've got it wrong. I think buying yen on this pullback would be good if you're looking at the yen crosses. I think there'll be opportunities there as we're getting a bit of a pullback, is to get long yen against the weaker currencies such as these three commodity currencies, and potentially these two as well. My advice is stay out of it. If you have to trade, don't trade for too long, be in and out in a short period of time. I think Jerome Powell will raise rates, but in his speech it'll be the key, right? So expect the rate rise to happen. I think that's about an 80% chance given, but it's what's going to be said in this conference and how he sees the future of the American economy and financial institutions. That's going to be the key. So up early, so we watch that and trade carefully, guys. We'll talk about it tomorrow.